Hey everyone, welcome to our new series, Construction Accounting 101. I've got Lisa Hutt here with me today. Lisa Hutt is a CPA. She's going to take us through what a P&L is and how you can use it in your construction business. Before we get started though, this is not financial advice. So if you do need or have questions about your P&L, please contact a CPA, hire a CPA or an accountant so that they can walk you through in detail. So what we're going to discuss here is very broad terms and an overview. Lisa, what the heck is a P&L?
Yeah, so P&L is short for a profit and loss statement, also called an income statement. And what it is, it's a historical financial statement, one of them, that goes through basically accumulates your revenue, your costs, your operating expenses, other expenses. It accumulates those totals for you and reports them on a time period basis. So monthly, quarterly, annually, whatever you decide. But it's a historical statement to show you how you have done in your business, profitability wise.
So if I wanted to take a look at what we were doing, this quarter last year, P&L might be a good statement to run, right?
Yes, exactly. Yes. It basically, a good way to look at it too, you can look at a trend to see, am I growing? Am I doing better? So it's a really good trending statement to use to see your growth patterns as well.
I know I use it all the time to reference our growth and to reference our growth patterns, and super helpful, obviously, and the ability to just drill down into it as well, down into the specific transactions is always helpful. I think I'll just let you kind of dive right into it and take the users through, what a profit and loss statement looks like for a construction company.
Sure. And a couple of things I want to point out, specifically in the construction industry. You usually have a seasonal trend or a season where you have your revenue is not as high in that month or that quarter, depending on if it's winter, what part of the US you live in, if you go all year or not. A lot of heavy highway or companies that do outdoor exterior work, they're building buildings, might not do so in the winter. So you do want to be cognizant of that when you're looking at your profit and loss, what time periods you're looking at and comparing year over year. Because that sometimes isn't a good picture if you are looking at too short of a time frame.
If I'm not building in January and, I'm wondering why we aren't, producing revenue in January, that may be we just need to expand the scope and really determine if, we're trying to put together an outlook or a forecast of some sort, right?
Exactly. A lot of people, when they're comparing year over year, they might do more of a 6-month trend or the whole year because it really is, and it depends on the season or the year. You could have a really bad winter that year. And, keeping your banks and your bonding companies and all of those people apprised of why your year was the way it was. There's competitors that come into the market you have to consider. Weather, you have labor trends. There's a lot of different factors that can affect your P&L outside of how you do on your own. So consider all of that, the economy, and if you have a political season. So there's a lot of factors that come into these things when you analyze them.
I call it the challenge statement, so I can pull a snapshot of months that, there's always a handful of months that we have that are slower in terms of revenue than others. And I look at that as a challenge to say, okay, well, what can we do in those months to generate revenue? Or what can we do in those months that maybe take us outside of what we're normally doing? Do we open up a new business or revenue stream and those types of things to fill those gaps? So this is probably my go-to report. And I think for most construction companies, it probably, there's the WIP report, of course, and obviously your balance statement and all that kind of stuff. But this is a pretty good comprehensive look at the business.
Yeah, and that's an interesting statement. And another thing you do is you reduce your workforce during those winter months. So there's temporary layoffs that happen to get your your revenue per full-time equivalent ratio down, which I'll talk about some of these. But keeping keeping apprised of your ratios is an important aspect to your profit and loss as well. Sure, you can look at your revenue and your costs and get the number, but also analyzing what does it mean is very important, even probably more so than you realize. So
awesome.
All right. So I'm going to show a few things here in what you can do as far as analyzing your statements, some ratios, how to use software to get the best use of your system to help you do this for you. So I'm going to share my screen here, and you can see this 12-month history. Reed, you can see this, correct?
I can, yeah.
Okay. So basically, when you are looking at software and you're looking at your system, you want to have different versions of your profit and loss or your income statement to give you a different analysis. So this one, for example, is going into more of a 12-month trailing historical. How did I do over my 12 months? Okay. So basically, what I've done is just built this and said, I want to expand by monthly, and I want it to show my revenue and all of my costs and all of my operating expenses to get to my net income number. Okay. So your net income number, if you're learning accounting at all, your net income number is what you made from what you brought in the door, what you billed out to your customers, minus the expenses that came in the door. So think of it that way. There's a couple other factors in there like depreciation and such. But basically, it is just telling you what you made over that time period. Okay. So this is a nice one to see. Okay. Ooh, I went up here. What happened in September? Maybe you were light on work. You didn't do enough billings that month. There's all sorts of factors. But this profit and loss 12-month statement goes over that monthly analysis for you. Okay. So there's other ones you can do as well. Like people like to see percentage of revenue. So you can have a monthly column here with your dollar amount. You can do this computation column to do percent of revenue, quarterly and annually, for example. So here's another example, one that's pretty common. Actual versus budget. So if your company, I'm going to blow this up a little bit here. If your company budgets your revenue, your costs, your gross margin, and all of your operating expenses, you can do an actual versus annual budget or actual versus monthly budget and do a difference column here. So this one's useful to see, okay, how much more do I need to bill, or how much more revenue do I need to hit my goal for the year, right? It's a little opposite. This annual budget number is a little low, to be honest, but just as an example. Yeah, it looks a little funny. But just as an example of some common ones that are used, budget versus actual, a historical 12-month, and your percentage of revenue are common ones to use. So people do ratios inside of these P&Ls as well, or they might put their ratios at the bottom. But another cool thing that you can do is you can have dashboards that have all these ratios right here, right when you log in. Okay, so your current ratio, current assets over current liabilities, for example, debt to equity, if you've got debt, is kind of a good one to have.
Yeah.
Operating margin, et cetera. So you can also build these in a graphical format or a trending format to show, okay, year over year or actual versus budget. I've got my by PM, how are they doing? There's all sorts of things you can do with software to help you analyze your profit and loss statement besides just seeing these numbers in a simple statement here. This tells more of a story when you're looking at, those specific key metrics you should focus on.
And I think we're all visual thinkers and learners. Mm-hmm. I think it's great that you can have it in sort of multiple different variations, because obviously some people are going to download the P&L to Excel and that's how they best view or utilize it, and others are going to want that in a chart, and hey, let's trend that over a certain period of months. So cool.
Mm-hmm. Yep. You can send out these to yourself as well. I mean, there's just so much you can do in this world now to keep yourself with enough information and enough knowledge to run your business. You want to close your books as quick as possible, so you have that P&L sooner, so you can forecast sooner. Am I going to be running low on cash? Do I need to dip into my line of credit? There's just so many things you should do with your P&L and other financial statements to help your business, so that you have the information you need to make decisions.
So why don't we go back to that P&L statement that you had, the 12-month trailing, and why don't you run through some of the basic components here? I mean, I'm seeing, we've got net income, we've got total revenue with sales, maybe total revenue with others. Why don't you walk us through some of those?
Yeah. So for construction, there are some specific accounts and some specific things that you need to know when you're looking at especially your top part, your revenue and your cost of goods sold. So your revenue here is your billings. So a very simple setup, you're going to set up your system to hit an account called something like construction income. You could call it construction billings if you want. And you're going to generate your billings to your owners and your customers to come to this account. That's not necessarily what you've collected, by the way. That's what you sent out the door and you've billed them. Okay, so two different things.
It's not cash in hand.
Nope,
right?
That's different. Right. That's a cash flow statement, which that's a whole nother series we'll be working on as well.
Awesome.
Also, in your cost of sales area, this is going to be your AP bills, your payroll, your equipment costs, things that come in from subcontractors, when they invoice you. So that is this area here. The gross profit is what you are making on your jobs. So when you look at a work in process schedule and you are analyzing your work in process schedule, these totals here,
WIP, right?
Also WIP, yeah, very good. Or work in progress. People probably call it more commonly that.
Work in progress, work in process, WIP.
WIP, all the same thing. Yep. A very good thing to do is to make sure that your revenue, your billings up here, and your costs match your WIP schedule, your work in process Excel file. Otherwise, you're not going to have a true analysis when you're looking at your financials. Okay, so that's just a tidbit. That's another series we have too, how to properly tie out your P&L and your balance sheet to your WIP schedule. Okay, so that's a whole nother series. Yep.
Your WIP numbers and your gross profit numbers should be
matching on that file. Yep.
Perfect.
Then your operating expenses are all the things you do to run your office. You can see the examples here. Postage, communications, things you don't charge to jobs or projects. So it's outside of that scope. Depreciation, et cetera. So you come down to your operating expenses total, and that's a good metric to watch too, because a lot of the time your operating expenses, they're flat, or you can kind of gauge what they're going to be. Utilities might go up and down a tad, but your rent's your rent. Your property taxes are about the same, but they go up a little, right? So a good thing to do is compare it to your budget, because you can budget operating expenses. So
now, am I allocating any operational expenses to jobs or to projects? Is that something that's routinely done?
Yeah, so you can. Some companies decide to allocate your operating expenses or indirect costs and charge that out to jobs, either in a systematic manner, using the system to do that, or like they might do, they estimate, let's say I've got $500,000 in operating expenses for a year. I am going to factor that in to my costs in my jobs. Some people might use per hour basis. For every hour I'm going to recover indirect costs, I'm going to charge a couple bucks to a job and recoup those indirect costs into a job. So okay. Some companies do that and some choose not to. It's just a matter of understanding and making sure that you know which way you're doing it. So when you analyze your jobs, you know what's going on in your P&L. Either way is fine.
Yeah. So if we're allocating it to a job, for instance, or two jobs across multiples, how would it show up in this statement? I mean, how is it reflected here?
Yeah. So in here, what a lot of people do is they'll have an indirect cost they might call it indirect cost allocated to jobs, and it's a negative expense. So let's say, for example, it would be $5,000. You would have a negative 5,000 here, and you'd have an indirect cost up here as a positive 5,000. And it will be charged to the job through a job cost entry. So your WIP report would reflect it as well, and the costs for that job or jobs. Yep. So it's just an allocation.
I know we went a little bit deeper, but I think that's one of those
important.
things that is important, right?
Yeah, good question, Reed. Yeah.
If you're on QuickBooks, if you're on, an accounting system that doesn't allow you to, properly job cost, obviously it's not going to be reflected in things like this. So I think it's cool that we're able to dive into that a little bit.
Yeah. And Intacct does offer, a method to do that automatic allocation. So you don't have to think about it too much. It just does it based on costs or labor or something like that, like we discussed. So yeah, it's pretty cool.
Awesome. Cool.
Then you come down here and you have your net income. So gross margin minus your operating, minus your other costs. So like your interest income expense or miscellaneous expenses. So this is where those graph line charts and your bar charts can be analyzed off of that profit and loss statement. So it's built using one of those statements.
Awesome.
So basically, just keep apprised of, like I said, all those other conditions that happen in a year, and use visuals. That's a big thing that I've started doing over the last decade, is use more of those visuals, especially for your ownership team. I mean, it's just such a powerful thing. Sure, they can see this and read it, but they want to see what's going on, and they want to see it visually usually.
Yeah, and putting together a dashboard it's very straightforward, and it's one of those things that just for our owner and our company, it's putting together a dashboard so that he can just take a look at that at any point in time and see exactly where our business is from a high level P&L standpoint. And then if they've got questions or anything like that, then we can drill down with further reports and get that information very quickly, which I think is important because then we get to focus our, brain power on higher value tasks.
Exactly. A lot of them too, that people like to see, is to help them so they can prevent that cost or some of those, months where you might have a winter season and you need to, maybe I've got to lay off 5 more workers because I'm starting to see my trends going down. So keeping on top of those really does help you become a more profitable company overall.
Well, thanks, Lisa, so much. I appreciate you taking the time to walk us through what the heck a P&L statement is and how you can use it in your construction business. Again, it's not financial advice. If you do have detailed questions about your P&L or how to read it or anything like that, please hire a CPA or contact a financial professional so that they can walk you through that and give you a full explainer on your specific circumstance and situation. Well, we're going to continue this series. So if you like this video, go ahead and like and subscribe. And yeah, if, what other uses do you find for P&L? If you know anything, let us know down in the comments. We'd be glad to engage in a conversation about it. Thanks, Lisa.
Thank you.